Finally, after a few years, we have new investment funds under GCash GINVEST. Specifically, we have 4 new unit investment trust funds or UITFs, and these are brought to us by Manulife. And the great thing about these funds is that they are actually all dividend paying. So if you want some regular income from your investments, these funds might be for you. In today's video, I'm sharing with you the details on these 4 new funds, and I'm ranking these funds from least interesting to most interesting. Will they be worth your time? This is what we'll look to cover in this video. So if you're interested, stick around and let's find out. Let's go. But before anything, if you are new to this channel, hi, I'm Mark. It's nice to meet you. In this channel, I talk a little bit about lifestyle, but I mostly talk about business and investments. At long last, we finally have new things that we can invest in under GFunds. As mentioned in a few videos ago, Maya Funds from GCash's main competitor has actually caught up, even as GCash was really first to the scene in launching these investment funds. So I'm really glad that GCash has these new investment funds. Unfortunately though, Maya's main feature of being able to show us easily our return of investment, what we've invested, and what's its current value, this feature is still lacking in GFunds. So GFunds, I hope you hear this and make it easier for a lot of us to be able to track our investments. But anyway, before going into these funds, I wanted to give credit where credit is due, and I like the fact that GFunds has integrated these new funds into the GFund section quite seamlessly. I mean, the main difference of Maya Funds is that their Maya Funds actually branches out into 2 sections between Seedbox Philippines and Investagrams. So the user interface, the way that GFunds has gone about this is cleaner, is a little bit more easy to follow, and I applaud them for that. So let's now go into these 4 new investment funds brought to us by Manulife. Again, I'm ranking these from what's least interesting to me to the most interesting one. Again, these 4 funds are all dividend paying, so it's just about us finding the right investment fund that fits your investment goals and what you really want out of it, whether you want more capital appreciation in terms of its net asset value or maybe in terms of its regular dividends. So these are the 2 things that we're looking at today. So just a disclaimer that I'm ranking these based only on my own personal opinion. So my opinions would again be fitting my own investment goals. So let's start off with number 4. The least interesting fund to me would be the Asia Dynamic Bond Feeder Fund. Now, as a bond fund, the criteria for investing in this would be an aggressive risk tolerance. But despite this aggressiveness, I would say this is the most conservative one from these 4 new funds. So as always, when it comes to stocks versus bonds, bonds would always be on the conservative side. So it's investing in Asian bonds that are either corporate or government-backed. So these are fixed income securities, treasuries. Let's now go into the historical performance of this fund based on its key information and investment disclosure. You may find this in the Manulife website. So in terms of dividends in the last 12 months, the dividends that were paid out by this fund totals 3.33%. So the dividend for this fund is paid out monthly. Moving on to its net asset value, in the last 3 years, it is said to have an annualized performance of 3.05%. By the way, the data on the document is as of June 30, 2025. When we check the GFund section, this actually displays the performance of the fund in the last 1 year. And in this last 1 year period, the fund is down, unfortunately, by a negative 0.64%. So with these numbers, you see why it is the least interesting to me. I mean, it's not really giving much in terms of dividends. At the same time, it's also not giving much in terms of capital appreciation, in terms of its NAV. Let's now move on to number 3, or the second least interesting fund to me. So for number 3, we have the Manulife Global REIT Feeder Fund. So this is actually one of 2 REIT feeder funds that are being launched by GFunds with Manulife. 70% of this fund is invested in REITs or real estate investment trusts, while the remaining 30% would be invested in real estate securities. As with the last fund, this is also a monthly dividend payout. Its returns in terms of dividends in the last year equals 4.01%. So this is slightly higher than our previous fund. In terms of its net asset value in the last 3 years, This has an annualized performance of 2.37%. So its capital appreciation is actually very slow. While in the last 1 year period, again based on the GCash GINVEST section, its returns are at a negative 2.07%. Now, between rank number 3 and number 4, your opinion might actually vary. I mean, the Asia Dynamic Bond Feeder Fund has slightly lower dividends, but at the same time, the performance of the NAV of this global REIT feeder fund is even lower than the bond fund. Which one is better? That might actually be debatable. Let me know what you think in the comment section. Let's now move on to the second most interesting fund from Manulife. I mentioned earlier that there are 2 REIT feeder funds that are being launched, and this would be the second of them. This is the Asia Pacific REIT Feeder Fund. So specific for this fund and this fund only, unfortunately, I wasn't able to find the key information and investment disclosure that Manulife has on its website for the other funds. They have a different sort of layout, a different brochure for this. So the data here is not completely apples to apples. But anyway, this is the best that I could abstract from what they have on their website. So for its dividend payouts, it's said to have given out 4.46% in the last 2 years. So this is already higher than our first 2 funds. While in terms of its net asset value, rather than just working with a 3-year period, what I was able to get is its 10-year annualized performance. And this stands at 3.53%. So actually not bad. Again, this is better performing than our first 2 funds. And in the last 1 year period, according to the GFunds section, the fund has a return of 4.26%. Now, the main difference of this fund from the other Manulife funds being launched is that its dividend payout is only coming on a semi-annual basis. So this is only twice a year rather than the monthly dividend payouts that the other funds are doing. But in terms of returns, it's actually quite encouraging. So again, at number 2, that's the Asia Pacific REIT Fund of Funds. Let's now move on to number 1, what I think is the most interesting of these Manulife funds. At number 1, we have the Manulife Global Preferred Income Feeder Fund. Now, for the majority of its portfolio, over 70% is actually invested in preferred securities. So these preferred securities are invested in a wide range of different industries, electric, banking, energy. So amongst all these funds, this is perhaps the most diverse, perhaps also the most volatile, but based on data, it's looking like it's giving the best returns. In the last 12 months, the total dividends that have been paid out is at 5.01%, while in terms of its net asset value, in the last 3 years, the Global Preferred Income Feeder Fund has an annualized return of 7.48%, while in the last 1 year period, again based on the GFund section, this fund has a return of just 0.8%. So those are the 4 new funds that are being launched under GFunds by Manulife. All of these funds have a minimum of 1,000 pesos to get started. While the trust fee, everything is at 1.75%, except for the bond fund. The bond fund actually comes in at 1.5%. So that's how I would be ranking these funds. Well, as always, I would actually like to invest in these funds. I am getting started in investing in them. Unfortunately, it's quite pricey. But as with most investments in this channel, I actually like to try it out, see the actual results, and compare this to what's printed in the disclosure forms. Again, since GFunds has no way to be able to track additional investments, for now, I'm just going to be investing the minimum, and I'm going to be reporting that to you in future videos, how it's faring. Some of you have said that the monthly dividends aren't coming in, so I actually wanted to try it out, see what the situation is on these dividends. So as mentioned previously, the ALFM Global Multi-Asset Income Fund, like one of you have said in the comment section, these types of dividend-paying funds will not really be your engine towards retirement. It's not really going to be about capital appreciation. It definitely helps with cash flow, but it's not going to be performing alongside the S&P 500 or other equities. Again, dividend-paying funds are there to do exactly what is said, to be paying you regular dividends, and the net asset value will always be tempered because you are really looking at the dividends first and foremost. So with this, how does it compare? Well, I think the ALFM Global Multi-Asset Income Fund still has performed better. I mean, the dividends for the ALFM fund is at 5.97% in the last 1 year period, while its net asset value performance in the last 3 years is at an annualized value of 6.56%. So again, yes, the famous or infamous ALFM Global Multi-Asset Income Fund, while loved and hated by a lot of you, historically speaking, is performing better than these Manulife funds. This is not a paid advertisement. I mean, I've done a lot of videos on the ALFM Global Multi-Asset Income Fund, not because I'm paid, but only because you guys like to talk about it and it gets a lot of views, so it does help me keep this channel afloat. But just calling it as it is, maybe this will not be the case in the future, especially this fund is again aggressively investing in global REITs and preferred securities across different industries. So these funds might just be looking up in terms of their performance. So what do you think about these Manulife funds? Do you think it's worthwhile? Are you attracted by their dividends? If you like this video, please don't forget to like, comment, and consider subscribing if you haven't already. Thanks again for watching, guys, and happy investing.